I'm going to give a very brief overview of the reconciliation process and particularly look at a question that we had, which was how many people were going to be in a situation where they owed more tax than they had refund coming to them. In other words, had to write a net payment to the Treasury. As Bill mentioned, when people are filing their taxes this year, participants in the Affordable Care Act who got health insurance last year and claimed credits in advance to subsidize their premiums will find out whether they got too much of a credit or too little, and it's based on whether their income went up or down over the course of the year and also whether they reported that change in time. The subsidies are based on premiums in a particular area, which are a function of family size and situation, and the subsidies are based on income levels. So the idea of the Affordable Care Act maybe is to make health insurance affordable. So the premiums are capped at a percentage of income that rises with income from 100% of poverty to people in states that didn't expand Medicaid and therefore were not eligible for health insurance through Medicaid, up to 9.5% of the poverty level, up to 400%, 9.5% of income, up to 400% of the federal poverty level. At that point, the subsidies disappear, and individuals who get insurance through an exchange have to pay the entire premium out of pocket. You can see that the maximum premium grows pretty dramatically, especially for a family of four. The maximum premium will be $477 right at the poverty level. For somebody just below the threshold where they're not eligible for subsidies anymore, the maximum premium will be $9,040. The actual premium depends on the cost of the plan purchased. So the subsidies are based on a projection of income at the time people apply for coverage, and people are supposed to report income changes because the actual subsidy you're eligible for depends on your actual income in the year. Unlike other programs, the subsidy is based on annual income. So you could report income changes reliably over the course of the year, but if your income grows very substantially at the end of the year, you could actually still owe a substantial reconciliation payment, basically the difference between the advance credit that you claimed and the amount that you're eligible for over the course of the year. And I think